Hey everyone, this is Rahul with the Alternative Investors Hangout, and today we have a returning guest, John Manfreda. He's over at Wallstformainst.com, and it's been quite a while. I think the last time I interviewed you was in December.
Yeah, thanks for having me.
Yup. All right. A lot of things have gone on since the beginning of the year, and we've noticed that the Dow, we still have seen the market go up slightly. We've seen gold and silver go up. But what I've noticed in the stock market is, number one, when it comes to sentiment, you go on YouTube, you go on CNBC, mainstream media, anywhere you go, even alternative media, the comments are a lot of people are bullish on the market, right? A lot of people are saying, hey, it's not going to go down yet, and yeah, we do know what's going to happen at the end of the story. But if you look at what's going on, all-time margin high, you see all this bullish sentiment going on, something's telling me that it's going to go down and that we're going to see a 2-3 year bear market, just like we've seen gold and silver. What do you think is going to happen there?
Well, in terms of prediction, I can't say for sure. But I would say right now, my personal opinion is I think it will probably go flat. I think the big heydays are probably over. I read an article. I do think we're seeing some euphoria. I read an article saying you can't lose in equities. Literally, they said the central banks will do whatever they can to prop it up. This was Yahoo Finance, by the way. This wasn't like a YouTube prepper channel. This was Yahoo Finance saying you can't lose in equities. The central banks will do whatever they can to prop it up. And if the stock market has a meaningful correction, the central banks will come back in and prop it up. So you really can't lose. That's generally a sign of a top. That isn't a sign of a bottom. That isn't a sign of... one thing we don't have is the retail investor is not in the stock market. Never has been. Investor wealth is at a huge low. I don't know if it's all-time low, but it's close to it. There's very few people in the stock market. A lot of people I talk to that are in wealth management, I know through my day job, they even say the retail investor is not in the stock market. So that is the one thing we don't have yet as a confirmation for the top when the retail investor is just pouring in. But the media is now approaching this as a can't-lose bet. Earnings, they're starting to falter a little bit. They weren't like they were last year. You have margin debt at all-time highs. The thing is, they're going to do whatever it takes because they're committed to wealth effect to keep this thing up. So I don't think we're near a crash. And the reason the earnings are up, a lot of people say the stock market's going up because of earnings. It's earnings. Well, why are earnings going up? It's because they use this cheap debt, and they can't grow because there's no growth in the real economy. In fact, the consumer is getting, all the consumer spending numbers, and you see Amazon, Walmart, their earnings aren't great. McDonald's is struggling. Some of that is due to Russian sanctions, but they were struggling before that. They were struggling in October, and there was no Russian sanctions. So we're seeing a lot of middle-class company staples doing poorly, and that is because they're losing money. So as a result, these companies realize they want to take advantage of this debt, but they can't grow their business because the U.S. consumer in general is getting poor. So what they're doing is they're buying back their shares and increasing their earnings. The crash will come when the Fed loses control of the interest rates. And I don't think we're near that yet. They have, despite, the taper, and I put taper in quotes, they are not by any stretch. I don't think there's a real taper, meaning no one's buying purchases. I just think it's a currency swap. Another central bank's doing it. Bloomberg reported China has taken place through Euroclear, or the Euroclear bank. So I don't see a stock market crash yet. You'd have to wait till interest rates start creeping up and companies are no longer to borrow cheap money and buy back their shares to increase their earnings. That will be the kicker, in my opinion. And I don't think we're quite there yet.
You mentioned Euroclear. There may be some individuals that don't know what Euroclear is and what it has to deal with some shenanigans going on behind the scenes. May you elaborate?
Yeah, it's just a bank in Belgium where huge amounts of treasuries have shown up since the taper, where they're buying. I always thought the ECB, the reason the Fed's tapered, is because they had to deal with the ECB. They had to deal with the ECB, and the ECB took the place of the Federal Reserve to buy the treasuries to keep interest rates low so the government doesn't become insolvent. Bloomberg has reported it's China now that's taken the place, which is very interesting. That way it doesn't show up on China's balance sheet. I also think, if this is true per se, I'm not saying it's not true, but, it's believe half of what you read and the other half is completely that. I forget the whole saying, but I personally think China could be using that as a financial weapon because you see them agitating Japan, and the U.S. has a big treaty with Japan. You see a lot of countries in their Asian region, they don't get along with China. So in the U.S., they're with Australia, but, it's sort of Australia's stuck in a rock and a hard place because they like the U.S., they were long allies, but China now. China is also, they need the Chinese consumer. There's a lot of different things going on with, and there's also the BRICS, the new bank with the BRICS, where China's going to be making most of the investments. And they haven't said this, but I personally think that's a competitor to the IMF and the World Bank. And so I think China, if they are buying the treasuries, let's say it's not the ECB, it is China. I think if China is not buying the treasuries, then the reason they're doing it is they're leveraging themselves where they can tell the U.S. what to do. Say, do what we want. Or if they're going to merge the BRICS one with the IMF, they're going to use it as negotiating power. This is what we want, or we're going to crash your economy. We're going to sell our housing assets, our treasury assets, and there's nothing. And then the U.S. will fold. I don't think we're near that yet, but I think that's probably what's going to happen. That's what's happening if China is buying. It makes more sense that the ECB is buying, and they're just taking turns. That makes more sense to me. But it could be China's doing it. But if it is, it's strategic and it's not out of a friendship deal.
I'm looking at the TIC data right now, or the major foreign holders of Treasury securities, and the data goes back to June 2014, unless I'm looking at some old document. But it says that Belgium has $364 billion of U.S. Treasuries. Number 2 is Japan with 1.219 billion, and then trillion, and then China has close to 1.3 trillion with 1.268 trillion. So if you look at that, it just looks shady in my opinion, like you're saying. And then below Belgium, it's the Caribbean Bank Center, which has $308 billion in treasuries, and I wonder what's going on with that. So, yeah, shenanigans going on behind the scenes.
Well, actually, the Caribbean, they're actually a tax haven, and a lot of high net wealth people, park their money there because of the low tax environment. So who knows? The U.S. government does have, they do want their money. There's FACTA now enforced where foreign banks have to report U.S. clients' holding. In fact, Switzerland is completely getting out of dealing with U.S. clients now. The funny thing is my company that I work for used to sell Swiss annuities, and they have completely turned away U.S. clients now. So Swiss annuities are no longer available to U.S. citizens. So they could be using it if U.S. tries to sink their teeth into the Caymans. They might just say, all right, let's sell the treasuries. Maybe this will weaken them. I don't know if that's true, but, it could be the Caribbean, They can't fight with their military. I know that.
That is funny.
Mm-hmm.
Alrighty, I wanted to change gears, and you did mention about your work, and I was talking to you about this potential topic we could go over, and it's gold confiscation. We always see this story going around the alternative media about gold confiscation, saying that, hey, you know what, they could have an FDR 2.0, and the government could seize your gold, and we see some bullion companies that say that, hey, guess what, you should buy some buffaloes or Indians. Could you elaborate more on that or talk about that?
Well, actually, buffaloes are a bullion coin. So
Not buffaloes, I mean.
But yeah, I know what you meant. Semi-numismatic, the Indians, the St. Gaudens, the Liberties, those are the big three of the semi-numismatic. And semi-numismatic is a compliment because they literally have no coin collector value. The only reason they went up in value is because gold went up. And it had you got a huge premium over spot in it when you sold it in 2006. The only reason, though, is gold went up, and there wasn't really much of a customer base by the U.S. Retail market. So it was, it did have somewhat of a numismatic premium. But what happened is, what a lot of companies do is they run the confiscation story. They run it. And then what they do is say, well, the Eagles, the Maple Leafs, the Philharmonics, the Cougarans, those are confiscatable. If the government does do it in 1933 and they go broke and they need their money, but if you buy these certified coins, they're considered coin collectors and they won't confiscate your gold. Well, the reality is, if things got that bad where SWAT's coming into your house to break in and steal your gold, they're not going to know the difference between literally a St. Gaudens and a gold eagle. They're not. They're not going to know the difference between a Liberty and a Buffalo or a lot of those coins. They're not going to know the difference between a Buffalo and an Indian. A novice who knows nothing about bullion, who doesn't know anything about bullion, is not going to know the difference between those two coins. So everything, if that case did occur, everything would be confiscatable. But the reason they do that is a lot of companies, it's sort of a scam. They mark it up 50 to 100%. They make tons of money. So even gold rises 40%, you're still down in the hole. And when people talk about confiscation, whether knowingly or unknowingly on YouTube, they're feeding that beast. The reality is when FDR had his confiscation, first of all, you turn it in voluntarily, and they gave you the money back. Now, they did devalue it to $35 an ounce from $20, but it was done on a voluntary basis, believe it or not. A lot of people actually, the reason why a lot of the Indian coins and Saint coins and all those were the common coins from when we were on the gold standard. A lot of them, they just weren't turned in. There were people who didn't turn them in and just had them. You see this. People buried them in their yard. You heard that one story about a family having a $9 million treasure. A lot of people didn't turn it in. It was the FDR confiscation story was completely overblown. It's complete fear-mongering. And not only that, people talk about confiscation. Silver's really never been confiscated. I don't see an industrial metal being confiscated. But my philosophy is if you are worried about confiscation, still buy the regular bullion items like the Eagles or the Buffaloes. I like the Philharmonics and the Maples myself. And don't let the government bully you out of gold bullion.
Indeed. All right. I wanted to go into a new topic now, and it's more in the realm of what you cover. It's alternative investing. If you look at uranium, I thought uranium would have a decent year this year. So far, it's been flat. But what do you see happening with uranium? Do you see a bull market happening?
I think it would. It might be till 2016, because that's when all the China plants come online. You do see Japan slowly restarting their plants, but it's slowly. What happened, which was unforeseen, was the U.S. Started selling lots of uranium onto the market in 2014, and there used to be a rule they cannot sell it for less than what it costs to produce it. It was a law just to protect the miners, but they decided not to do it this year. And that has really taken the spot price below. But what's happening is the cure for low prices is low prices. Cigar Lake was actually on Cameco. That was denied. And this time it wasn't because of the logistics. And that's actually a huge uranium mine that's under a lake. This time they have the logistics. Now it's just prices. They're not going to try to pump uranium from under a lake for low prices. It's just not. And from a business standpoint, it makes absolutely no sense. So they're not going to do that. They shut down. They put another mine on care and maintenance. So you're seeing a lot of mines just come offline. But the thing is, I subscribe to that Richard Cantillon theory that mine shutting down isn't a immediate catalyst for prices. I think it will be, because when the bull market resumes, what happens is there's less of it. There's more bidders, but there's less supplies, and that creates a more upward spike momentum. And I think 2016, when China gets their plants online, that's when it will probably resume. Japan, they're still starting it, but they're doing it slower than everyone thought. It's not like all 40 are coming back on at once, which a lot of people anticipated, but they're doing it one at a time, two at a time, to appease, because there's a lot of anti-nuclear sentiment. But the reality is if they don't start it, they're going to be paying $16, $17 per thermal unit for natural gas. It's destroying their it's increasing. Their electricity costs are really going up. They're economically struggling. And I think uranium, Japan, this won't solve Japan's problems. I still think Japan's finished, but this will help weather a storm. But they have to start those nuclear power plants so they're more competitive with their exports, because costs are going up. And it's not just because of devaluation of their currency. It's also because their electricity rates are rising.
Yep. And if you want to look at some other alternative investments, there has been talk about rhodium as the next big thing. I've seen a few articles on that, some videos on that, saying that, hey, guess what, no one's talking about it. It was $900 before. It went up to $1,400. Now it's, I think, like $1,250-ish. I don't know the exact price. But you were telling me off air that your problem with rhodium is the bid and ask spread.
Yeah, well, right now it's $100, so you buy it, you're automatically $100 into the hole. That's the first problem. And not only that doesn't. If you're going to buy physical rhodium, like you are a retail bullion guy, that doesn't include the premium. So you're basically down 15% upon date of purchase. They won't disclose that to you. They'll just say you're paying. Let's say it's $1,300, and let's say they give you a 4% premium or 5% premium or 3% premium, whatever. We'll just say 3.5%. They're going to say you're going to pay 3.5% over spot. The reality is when you go to sell it, let's say $1,350 or $1,360, you turn around and sell it, you're getting $1,200 because the bid is $100 less. So you are paying quite. I don't know much about rhodium, but I do know buyer beware. Do not put too much money into it. Should be only spec, and you better be very confident that in rhodium, because you're starting out down 10 to 15% upon purchase of rhodium. So you better be very confident it's going up. I would say 80, 90%.
Yeah, one thing about rhodium, though,
one other
that I
forgot to say, if it crashes, like gold and silver, say it goes down.
It already did crash, though.
I don't know much about it, but let's say it does crash. Let's say you lose 30%, you're really losing 45% because it's a premium. So if it goes down, there is risk, so buyer beware. Go ahead, I'm sorry.
Yeah, I remember seeing some charts saying that it was like 2,900 a while back. I mean, a few years ago, and now the low was 900. So that's what I was just going to say.
Yeah.
So I think if it goes to the downside, I don't expect much more room going to that side, but we shall see where it goes.
Anyways, it could do incredibly well. I just don't know much about it. I'm just talking about what I know is the bid-ask spread
from
stuff.
The premiums, yeah,
and
from you following it.
Yeah, and I'm in the bullion industry, so I know the premiums that you'll have to pay. And I'm just saying, be very confident and know what you're doing. I don't know much what it's about, so I can't give an opinion. It could go up, it could go down, it can outperform every sector. I don't know.
Alrighty, John, and before I let you go, how could people follow your work?
Wall Street for Main Street. That's basically what it is. We have YouTube channel. You can follow us there. We have we have Facebook. We're on Twitter. So on our website, wallstformainst.com. Thank you for having me.
Yeah, thanks for coming on again, John.
All right, you're welcome.